gonna look, take a low risk long in here, just 5 micros for me. If it does give me the opportunity, I may look to build it up and make a bigger position out of it, but just keeping it light. But what the hell's going on here? Oh, closing out. So that would be a stop loss. I closed that out immediately. So I closed that out. That as soon as I entered it, immediately slammed lower. Not what I wanted to see. Didn't even let me place my stop loss. That's why I'm also entering low size in this climate as well. Because if you'll see, like sometimes they'll just take 1 minute candles and move them 30, 40, 50, 60 points. And if I'm on the wrong side of that of a mini, it's not going to end me, but it wouldn't feel good taking a $2,000, $3,000 thing. So that's also why I'm trading low size as well, because of things like that. We're in a very high risk climate right now. Yeah. So with the bearishness now, sell side here and here, we get through that first presented gap. I'm gonna try a short in here. It's crazy. I get in and immediately 100 ticks of profit. I usually don't get surprised by much in the markets, man, but we're in crazy times. All right, so aiming for this sell side here that we had in the pre-market, right? And we also have that new day opening gap at the 570 level. All right, hey, the trader, just below that low, closing out there. So saying that to say, guys, up close candle, I was shorting inside that bearish order block close to the midnight opening price. So we have a bearish order block, this up close candle. I'm shorting inside of that, also inside that first fair value gap here. What am I aiming for? Sell side here, here, and then that new day opening gap I gave you guys. So let me go to the execution so you guys can see that's indeed what I was doing here this session. So on this initial trade, it went long inside the IFVG, and then I got stopped out here. Well, I didn't get stopped out. I actually closed out manually because by the time I get in, it just immediately sunk. Didn't even allow me to place a stop loss, which is why you always place a stop loss, guys. Because imagine if you get in here and then they just sink it 300 points. That's absolutely a risk in the market in this climate that we're in, which is why I don't want to be caught with my pants down trading 2 or 3 minis, doing some crazy shit, and then I get 5 to 6K immediately withdrawn out of my account. That's what risk I'm not willing to assume, and especially not live in front of you guys. So once we broke down, market gave me feedback, it's bearish. So I'm going short here inside this up close at 648 and then covering at 679 here below this sell side. Okay. Thanks. And they left these relatively equal lows. And then if you guys recall what I shared with you guys on the 15-minute chart, right? Remember, I told you guys this isn't bullish, right? The fact that the market traded higher, snaps lower, pulls back into the range, that then indicated what? Seek and destroy. If it's seek and destroy, what does that mean? The market's going to reach for liquidity outside the range and then pull back into equilibrium. Then it's going to reach for liquidity outside the range here and then pull back into equilibrium. You see that? So you see how that then allowed me to pivot, right? It's not that I'm just, trading up and down, doing all sorts of crazy shit. I know what I'm looking at. So once the market took buy side, pulls back down to the range, shows bearish order flow, what's it going to attack? Discount levels, liquidity, inefficiency, only 2 things. Well, the liquidity is here on the 15-minute chart, right? We always do that, start on the 15-minute. And then what inefficiency do we have? New day opening gap here. So the fact that we had both of them, new day opening gap and sell side, well, that's an easy draw for me to expect the market to trade down into. Now, I did not expect it to take the elevator down and get there in 30 seconds, but, even better, right, when you're in those types of trades.